So, good morning, everyone. Welcome back to our morning classes of CA Final Indirect Tax. Today, we are going to start with one of my favorite laws, that is the customs laws. So, till now, we were discussing provisions under the GST law from all perspective. Firstly, we started with Constitution, then we went on to study the provisions relating to supply, the provisions relating to levy under GST, and then we proceeded with the chapters which were dealing with the procedural part. Now, from here, we will take up chapters of customs and then we will go to the remaining topics in GST so that you have a balance of both the laws. Now, when we talk about customs, let us understand customs firstly from the background, the overall design of the custom law, and somewhat history of the customs. So if I have to start with the history, it will be of interest to you all to note that customs is one of the oldest forms of taxes. So in the pre-British era or even pre-Mughal era, where we had all the kingdoms which were operating from different regions of India. Whenever a person is traveling from one kingdom to another and the person is entering a kingdom with the intent of staying there, doing some business over there, the person required a permit. This permit would be given obviously by the ruler of that kingdom, which would be either directly the king or any of the designated minister. This particular permit would be given only after that particular traveler, that particular trader gave some gifts to the kingdom, to the king's treasury. This particular gift was a formal, or I will say a compulsory payment, though I'm using the word gift because always it was in the form of the goods that this person brought in. So you would see in the movies or the serials or web series on any king that whenever an outsider visited the king for seeking permission to do business in that king's periphery, he would bring in a plate covered with silk cloth different items for the king. Many items were the same in which he wanted to trade. Many items were gifts from his place which are unique to his place. And only after the king was satisfied with the gifts, the king or the respective minister would give the permit to that person to stay there, to officially do business there. So, this particular gift giving was a custom, was a tradition, was a regular routine. And since it was a custom to give the gift, hence, when this particular duty got formally implemented, it was also given the name customs duty. So the custom word that we are using in customs duty is nothing but representing the tradition, the protocols that were followed in the earlier part of uh, our Indian history when we had different kings operating from the different regions. So this is a very uh, interesting and a very long backdated primitive detail about how customs evolved as a tax. Now, interestingly, I would like to also deliberate on second very important and interesting aspect that when we study taxes, majority of them are named as tax, like income tax, GST, service tax, but few of them are named as duty. excise duty, customs duty. Now, the question which I would like to ask you all, is there any difference between tax and duty? So, you may unmute yourself or you may put a text message in reply of this. So, my question to you all is there a difference between tax and duty? Because some are named as tax, rather, many are named as tax, and few are named as duty. Yes, anybody from you all? Geet, Yogesh, Neha, anyone. You may unmute or you may even put a text message. Yes, Geet says not sure. Okay, no problem. See, since we are in class, we are still studying, learning new concepts. You can even make a guesswork. That is fine. Only when you are advising, when you are in profession, guessworks are not allowed. But right now, since we are studying, we are learning. Learning is always by exploration, observation, imagination. It is not only by reading what is given. So imagine, explore. But Yogesh, if you're saying taxes on income, there are taxes on different things like service tax, value added tax. Later on, excise was converted to SENVAT. Later on, octroi was converted to local body tax. So all are not on income. Acha, this is good. So now I understood what you mean to say before and after. Okay, okay, understood. So it is not necessary that it will be on income only. So I understood what you mean to say. Perfect, Yogesh. This is perfect. So Yogesh has brought out the difference perfectly. What is the difference? To understand the difference, we have to first understand the concept of taxable event. So there is something called as taxable event in a taxation law. Taxable event is that activity, that transaction on the happening of which the tax is attracted or the tax is imposed or the tax is levied. Like income tax is attracted on the event of earning income. Sales tax, VAT, central sales tax attracted on sale of goods. Service tax attracted on provision of service. Customs attracted on import or export of goods. So these are the transactions, the events on the happening of which a particular tax is levied. This event is called as a taxable event. First thing. Now the difference. Where you are required to pay the tax after performing the taxable event, it is called as tax. Where you are required to pay the tax before performing the taxable event, it is duty. So you first pay and then do it, that is duty. You first do it and then pay, that is the tax. Now, this you can apply to any example that you know, any tax or duty that you know. Interestingly, even I'll give you example of those where earlier they were duties, later on they became tax. First is excise. Excise was before 90s required to be paid before the goods left the factory. So before you wanted to remove the goods from the factory, you had to ask the officer to come. The officer will do assessment and you pay, and then only you remove the goods. Later on, when it shifted to self-assessment, also you first pay, then the goods are removed. Later on, the name of the tax was changed from excise duty to sen VAT. So duty became tax, and not only the name change, but even the methodology change. So after this change, excise duty, which became sen VAT, that is central value added tax, was paid after the goods were removed. So throughout the month, throughout the quarter, you removed the goods from your factory after manufacture, and quarterly, monthly, like how today we are paying GST, you were going and discharging the excise duty, which then became SENVAT. So even the methodology change. Similarly, another example which I will give you is of local body tax, which was earlier called as octroi duty. So what is octroi? Octroi is the local level customs. Means what? Customs is levied when anything from outside territory is brought to another territory. So customs duty is levied for international transactions, and same thing applied at local level called as octroi duty. So when goods were sent from one municipality, municipal area, or in simple word city to another municipal limits or another city, the receiving city at the border of the city, in fact, to be very precise, outside the border of the city, had a place designated called as octroi naka, where all the trucks had to compulsorily go. That is, before entering the city limits, the trucks had to pass through that designated place called as octroi naka. Some officers were placed over there. They would check the trucks, they would check the documents, and the truck had to pay the octroi duty, get the receipt, and then only the truck could move in. This was octroi duty because it was paid before the goods entered that particular municipal limits, and that is why even today, even though all these octroi nakas are closed down, but you will find that the old octroi nakas you'll find exactly at the border of your city limits. You can ask any old businessman who is doing business for more than past 10 years. That person will tell you the exact location. You can go and check there. Maybe it would be now closed down or demolished and converted into something else. But earlier, these octroi nakas, like today, how you have the toll plazas, on similar fronts, there were these places placed physically outside, exactly outside the border of your city limits, municipal limits, and any truck which is entering with goods intended for being sold in that place would pass from there, and that truck would be required to pay the duty, would be required to pay the tax. This is what is the concept of octroi. Later on, many states converted it into local body tax. Now, the name changed from octroi duty to local body tax, LBT, whereby the duty was still levied, the tax was still levied, but post entrance means what? You allow your goods to come inside, let the goods come inside your borders. So, a trader who is bringing goods from outside city limits, outside municipal limits, was later on monthly, quarterly required to go and discharge the tax, which was called as LBT. Now, later on, it got subsumed in GST. So, today we do not have any of this. So, this is again the best example of difference in duty and tax. Coming back to customs. So, as we know, customs is a duty even today. So, even today, customs will be collected before the goods are imported into India or before the goods are exported outside India, because it is still a duty and maybe it will remain a duty for a long period of time further. Why? I'll tell you the reason later. Now, coming to next part, that is the history of customs duty in particular. So when the Britishers started ruling India, so they started imposing different taxes, duties. Excise was also imposed by them. VAT was also brought in by them. Income tax, I had mentioned in the previous class, was imposed by them as a penalty for the 1857 revolution. That was more of a punishment tax, later on became a formal tax. Similarly, following the tradition of the past kingdoms and rajas, the Britishers continued with the concept of customs duty, and in fact, they used it other way around. Today, what is happening? We are imposing more tax on import and less on export. But Britishers wanted to do exactly opposite. They wanted to bring in their foreign goods into India so that they could dump the goods here, sell the goods here. In fact, Britishers had come to India with that intention only, because there was industrial revolution, and to find markets, their people, their explorer went outside their country, their region to find out new markets, and that is how they landed in India and many other countries. So the point is, during British era, they were imposing less tax on import and more tax on exports for the reason that they wanted to make all these spices, whatever they were taking outside India, costlier in India so that consumption in India reduces and they are able to send it outside more. So during the British era, customs duty was formalized. However, if you see the history, you will find that now majorly in the primitive initial British era, there was transport majorly happening from sea. Then the second major after sea was road. And then very late, when we had proper commercial planes in place, we had transport through air. Even today, the same pattern is followed. Major transportation, international I'm talking about, is through sea because it is one of the cheapest mode. Plus, a sea vessel can carry huge quantum at one time. So in one voyage, a vessel can carry uh, tons of load. So today also sea transport is the highest quantum transport when it comes to international. Second is road, which may be through trucks, through railways. And the third is airways, because airways is very costly. But then for sensitive goods, gold, etc., all this, airways is always preferable for all purposes of safety, security, fast reach, etc. Now, when it comes to customs, there were separate custom laws for land transport, for sea transport, for air transport. So we had the land customs, we had the sea customs act. So there were separate acts because they were made at different points of time as different modes of transport started growing. So obviously the most oldest would be the sea transport because that is how the transport was happening oldest. So the sea customs is the oldest. Then came the land custom and very late the air customs. Today we have merged all the three customs law into a single law, which is called as the Customs Act. So earlier we had three laws, then we merged it and made it a single law. Now, if you see interestingly, the date of Customs Act, the date of Income Tax Act, all are foreign in and around 1960s. So even our Income Tax Act is 1960s, 61 Act, Customs Act is the same. So you can understand that immediately after independence, we were not completely independent when it came to policy making. In fact, Lord Mountbatten, if I'm right, was stayed back even after the Britishers left to support us in governance, etc. But the purpose was something else, but that was how it was framed. So in the initial post-independence period, we were using all the British laws only. Then slowly, as our parliament, as our different systems started developing, evolving, we started making our own laws. And you'll find this 1960s era as one of the eras during which all major taxation laws were redrafted, recrafted. So that is how you find income tax, customs having their main the acts that we are even using today are belonging to that period. Now, customs law started, and now I'm talking about 1960s, that is when we made our own customs law, which merged all the previous customs law of land, sea, air. Initially, the rate of tax of customs duty was part of the Customs Act itself. Then later on, they decided that we will make a separate act for the rate of duty. That is how today you have two major acts. One is the Customs Act for the law, the procedures, and you have the Customs Tariff Act for the rate of duty. Same thing was there for excise also. You had the Central Excise Act, which was 1944, and Central Excise Tariff Act, which was much later. So earlier, we used to have two acts, one for the law and the procedures, the other for the rate. So the same pattern you will find even today in customs, you have two separate laws. Besides that, since customs, now the main point, if you need to understand the ideology of customs, the main object of customs law is not only revenue collection or levying duty. Even though it is called as the Customs Duty Act, I believe one of the major reasons for customs is control, is even surveillance, is even security. How? See, customs is, you can say, a border tax where anything which is entering into India or anything which is going out of India, this is the last authority when it goes out of India, and this is the first authority when it comes to India to check what is going out, what is coming in. This is where the relevance of customs is much, much higher vis-a-vis the security and the surveillance aspect. So we cannot allow anything or anyone to enter India. Similarly, we cannot allow sensitive documents, sensitive information, or some perishable goods, or some goods which are more important for our domestic consumption and economy to go outside in uncontrolled numbers. So, to regulate this, to control this, one of the roles of the customs law is security surveillance, where besides collection of tax, a major purpose of customs is having a close watch, having a strict control on what is entering India, what is going outside India. So when you are studying customs law, keep this aspect in mind that customs law is designed not exclusively for the tax element or for the collection of taxes only. Yes, that is one of the you can say one of the main reasons, but equally important is the other reason, that is safety, security of India. So this is some basic about how customs has come into existence, what is the backdrop history, what is the recent history. Now, if you have any questions, doubts, you can ask me, or else we will proceed with the formal discussion on the various aspects of the law and the subject. Yes, students. Anybody has any particular question, maybe some insight, maybe some doubt? So, Geet has a different type of question in which he is trying to include both customs and GST. So the question that Geet has raised, or rather a concern or doubt which Geet has raised is whether we'll cover the whole Customs Act first and move to GST or some part. See, there is no any, I'll say, strict rule with us. We are trying to go in such a manner that you all are able to digest also, plus you all are also able, see what happens when a law or when a subject is going for a long period of time, after some time you start losing the connect or the interest. So we just thought of bringing in customs, one reason, but the main reason is that when you proceed with GST law, you'll find that in GST, at many places, customs reference comes. Now, reference comes, that is fine, but you don't understand the interlinkage or rather the importance of that part until unless you have understood the main customs law. So that is why, firstly, we have added customs now. So because we reach one conclusive part of GST, which was returns. So till that we completed, you can say the entire levy and everything. Now after that, we only have the procedural, the assessment and those topics. Now we are starting with the GST law. Again, you can say majorly we'll be covering the GST law because that is what is relevant for understanding and gaining the knowledge. But again, that is slightly, we are keeping it flexible with us, that where we feel that now some connecting part is required from GST, we will include, but or else you can say majorly we'll be covering customs and then moving on to GST. This is answering your question precisely. Okay, I was reading import export chapter before class where value of, yes, exactly. This is what is the point, beta. So if you remember, we had even done import export in the previous class. So not, sorry, it was LVRC. So when you read this chapter of import export in GST, it is okay when you read it, but to get the exact feel, if you have the background of customs, plus now what we will study very importantly, the valuation of customs. Some of these chapters of customs are very important if you want to have an in-depth understanding of those GST chapters. So you're right. So this is our main purpose of bringing the customs law, introducing the customs law to you all. So this first unit, we are going to study all these things, basic concepts, constitution, overview, then point circumstances relating to levy, remission, abatement, etc. So I've given you the backdrop, how customs duty has evolved. So customs is basically uh, tradition. The word customs earlier in the very primitive India, even long before all the Mughal etc. invasion, it was called as shulka. So the customs duty was referred to as shulka. Then, as I mentioned, you had separate laws. You had the Sea Customs Act, you had the Land Customs Act, but it was then formally merged into a single act called as the Customs Act 1962. And then later on, the rates were delinked into another act called as the Customs Tariff Act 1975. These were the old laws: Sea Customs Act, Inland Bonded Warehouses Act, Land Customs Act, etc. Now all these are brought into one single act, and only the tariff is dealing. Now, starting with the constitutional part, because before you understand any tax, you need to understand how it is backed by the constitution. So, firstly, the most important article to study any taxation law, which is common to all taxation law, is Article 265, and then except GST, for all other taxes, it is Article 246. Now, what is Article 265 saying? Article 265 says that no tax can be levied collected except by authority of law, which means that in order that you are able to levy a tax, you means the parliament, the government, and in order that you are able to collect a tax, both levy also, collect also, both requires a permission and authority. And this permission, this authority, as per Article 265, can be provided only by way of enacting a law. It means no tax can be levied if there is no law. No tax can be collected if the law has not provided for its collection. Like levy, we all know. I'll give you an example of collection. Today, we very commonly know RCM. Now, RCM mainly started with service tax. So, when service tax was implemented, now that is also a good history, though today we are not having the service tax law, so we never come to read that history. But just for your information, we brought in service tax in India from 1994. It was brought in when we opened the doors of our economy for the world. That is, we opted for globalization, 1990s. That period, we introduced major reforms, one of which was levying tax on services. But interestingly, at the time of making constitution, Article 246, see, this is the second most important article, which gives the list of the subject matter on which taxes, or for that matter, any powers. So it is not that the Article 246 and Schedule 7 only talks about taxes. It has given a list on what powers are with center, what powers are with state, and what are concurrent. Now, in this list, where you go to the center's power list, which is list one, also referred to as union list, you did not have the reference of the power of service tax. Because when the constitution was made and implemented from 1950, the lawmakers at that time never imagined that there could be anything like service. Yes, there was service, but that was all uh, honorary, or that was all in the form of serving. like we had healthcare, like we had education. But at that time, it was more with the sense of serving to the society. It was not on a commercial scale. But later on, when the service segment started increasing and it became a commercial, major commercial value adding element like the banking sector, the transport sector, then the government felt that why not levy tax, and they wanted to align the taxes with international model which had taxes on service. But the interesting fact point is that in 1994 when service tax was implemented, there was no power in the constitution to specifically provide for levy of service tax. Now interestingly, the first option that the government had was to amend the constitution, but we know we require a majority in the parliament for amending constitution. And at that time those periods of Indian politics were very see, before 1960s we always used to have a single power government. Even today, since 2014, we are having a single power government. Right now the present government is coalition government, but otherwise since 2014 we had a single power government. But there was an era in Indian politics during this 1990s, 2000, etc., when no single party could make a government. So there came the concept of coalition. And in coalition government, since 90s was the very uh, initial part where this coalition concept started in India from 80s rather. So these governments were very shaky. So even if one of the partners withdrew, the government would fall. So that was the condition. So they did not have that numbers to bring any substantial change in the constitution. And also maybe at that time, the lawmakers did not have that much faith and confidence in service tax, that in a country where majority people are not literate, where still the service sector was so much at personal level, it was not an organized sector. Whoever was providing service was doing it at the individual level. So they did not have the faith that service tax could be a very big revenue adding option for the government, but just to align Indian taxes with the international and to explore a new tax that introduced service tax. So they did not go for amending the constitution at that time itself. But then Article 265 says that to first levy a tax, you require a law. Then Article 245 and 246 comes into picture. What are they? The power for enacting the laws is conferred on the Parliament and on the state legislature. This is what Article 245 says. What it provides, subject to the provisions of Constitution, Parliament may make laws for whole of the country and state legislature can make law for any part of the state. So 245 said that who is having the lawmaking power? Parliament. And then 246, which is again an important article for us for taxation, says that who will have power to do what. So they gave, or to Article 246 gave this power through Schedule 7. Schedule 7 made three lists. List 1 listed out those subject matters for which the power was given to center, that is Parliament. List 2 made out those subject matter for which the power was given to state legislature, and list 3 is concurrent power list. Now, importantly, none of these lists had any power named service tax, like how you have power for customs duty, you have power for income tax. None of these lists had power for service tax. So, interestingly, what the government at that time decided that we will impose service tax, but since we do not have a specific power, we will use the residuary power which is in list 1. List 1 had an entry, residuary entry, which said that tax on any other item which is not covered in the state list. So that is how the residuary power was. Using this power, they decided to bring in service tax on a temporary trial basis. But then the second question came, what will be the law that they will be using? Because since the this did not give them a specific power to levy service tax, so there was also an issue that why to make a law? Because anyways we are doing it on trial basis. So interestingly, service tax in India was introduced in 1994 through that year's budget. So the Finance Act 1994, Chapter 5 became the base for imposing service tax in India. And just to add to this fact point, that later on constitution was amended to introduce a specific entry, if I'm not wrong, entry 92C, for levy of service tax, but that entry was never used because until introduction of GST, that is up to 30th of June 2017, where we had service tax, it continued to be levied using the residuary entry using chapter 5 of Finance Act 1994. So whenever you had to levy service tax, you referred back to Finance Act Chapter 5, and that was which Finance Act 1994. So even till 30th of June 2017, that is the last day we paid service tax, it was levied, it was collected under the powers of Finance Act 1994, and all future Finance Acts, that is budgets, always amended the original Chapter 5 of Finance Act 1994 to impose or bring in service tax. Now, I was mentioning about Article 265, which said that neither levy nor collection, nothing can be done without authority of law. Now, interestingly, I was talking about collection part. So, in service tax, they decided to bring in the concept of reverse charge mechanism. So, in one of the budgets after 1994, they introduced this concept of service tax, saying that service tax will be collected by the recipient on these two, three services. I think initially it was mainly transport. Now, importantly, they brought this by way of making a rule. Later on, it was challenged in the court, saying that since the act did not provide for collecting tax from the recipient, hence, it is ultra vires Article 265, because Article 265 specifically said the tax should be levied as well as collected. Both should be done by the authority of law. This is one example where uh, Article 265 was upheld, saying that RCM is invalid and the collection of service tax from the recipient is outside the authority of law. The law was the Finance Act 1994, Chapter 5, and it further said that you cannot collect this service tax until unless you have the power under the law, and this was considered to be violation of Article 265. After this judgment and other series of judgment, the Parliament then amended the service tax law, which is Chapter 5 of Finance Act 1994, to bring in a special provision to collect tax from recipient. And that is why today, even in the GST law, we have specific sections 9394 specifically saying, and importantly, these sections are in the levy section itself. So these sections are specifically saying that in few specified notified cases, tax will be collected under RCM. So in just a minute, please. So this is how Article 265 is relevant whenever it comes to imposition of tax or collection of tax. Now, as I said, the second very important article for the perspective of taxation is 246, through which you go to Schedule 7, where the powers are distributed by making three lists. Now, in this, when we talk about the customs, entry 83 of list 1, that is a union list, is covering the powers to impose or levy duties of customs, including export duties. This is interesting. So, export duty has been specifically mentioned that 83 gives you powers to levy duties of customs, which include export duties. Why this could be? Because earlier, majorly, even like the old history which I mentioned, the kingdoms were collecting customs duty mainly when anybody was coming into their territory or bringing goods into the territory. But where if any of the trader was going outside to sell the goods outside, there was no customs or the shulka. Hence, maybe to make it very express and clear, this particular point was specifically mentioned. Now, another important article which is relevant from taxation perspective is Article 286. So, what does Article 286 says? It provides for restriction as to imposition of tax on certain supply of goods or service or both. This article provides as under. Now, most important is this article is imposing restriction on the state. What it says, no law of state shall impose or authorize imposition of tax on supply of goods or service both where the supply takes place outside the state or where it takes place in the course of import of goods service. So this particular article 286 is disentitling the state to impose tax on two transactions. One, which is happening outside their state. Two, which is happening in the course of import export. Further, the same article further provides that Parliament can formulate principles for what? For determining when a supply will be treated as import or export. So, for import export, the article has taken away powers from state, and the same article further states that what will be import export will be decided by the Parliament, that is by the center. Thus, the power to levy customs duty on import export as well as the power to decide what transaction will be import export, both these things will be solely with the parliament, that is the union. Now let us go to the overview of customs law. So as we first saw, customs law, which is the Customs Act 1962, it extends to whole of India. Save as otherwise provided, it applies also to any offense contravention thereunder committed outside India by a person. Now, this is interesting. And for this, the point which I had mentioned that customs law should be looked upon not as a law only for imposing tax, only for collecting tax. Customs law is also for safety, security, surveillance. This is, you'll understand the importance of this part. That is, it also applies to offense contraventions which are committed outside India. So, we need a law which will cover all these things. So, customs is used for this also. So the entire gamut of the act is grouped into 17 chapters that we'll be studying over the period of time. Now, some important definitions. Beneficial owner means a person on whose behalf goods are imported or who exercises effective control over the goods. Now, why this section is required? Let us understand the relevance of this section. See, definition is very simple, but there is some reason why this section is introduced or this definition is there. So for this, understand briefly the import export model very briefly. Later on we go to that in more depth as we proceed. So let us say you are staying in a place like, for example, you are in Madurai. You have ordered a machinery which will be landing at the Bombay port, maybe let us say the Nhava Sheva port. Now when a machinery is landing at the Nhava Sheva port, which is in Mumbai, you may not be in a position to travel all the way from Madurai to Mumbai for clearing the machinery. Clearing means taking the control of the machinery from the customs authority. Plus, the procedures in customs are very stringent. The one of the most stringent laws when it comes to procedures, the forms and the mechanism is customs. So, and importantly, these procedures are regularly revised. They are changed. The forms are changed, the information requirement is changed, the document requirement is changed. So, for you, it may be very much impractical. If I cannot use the word impossible, I'm using the word impractical to physically carry out the import. Or let us say tomorrow you want to do export, the same thing. You may not be in a position to yourself execute the import or export transactions for both reasons. One, physically going to Mumbai port every time will be difficult. Two, it will be also difficult to keep a track of the proper procedures. To handle this practically today, 99% of the import export is not done by the original importer exporter. It is done by a person who is authorized, who is appointed by the importer exporter. So in your example, you will appoint me. Who am I? I am a person who is authorized or who has taken a type of a license to act as a CHA. CHA is a custom house agent. So custom house agent is a person who is stationed in that in that customs area itself and who has the in-depth and thorough knowledge of the entire custom procedures. So this person, that is me in this example, is well versed with the entire customs procedure applicable to that Nhava Sheva port. Also, I have taken a proper license permission to operate there. Now, you can appoint me, or in other words, you will hire me to work on your behalf, obviously for some fee, some charge. And this is what is the main basis of this concept of beneficial owner. So, I will be doing all the protocols of import export. But important is who is the real owner? It is you who is the real owner, though for all purposes, I will be doing the documentation to such an extent that every document I will be signing. So on the face of the document, many places it will be my signature, my sign, but you are the real owner. So that is where this concept of beneficial owner comes in. So beneficial owner means any person on whose behalf the goods are being imported, exported, who exercises effective control over the goods being imported, exported. So you, the real owner, is what is referred to over here as beneficial owner. Now you will say, sir, but then we are the importer exporter. No, when we go to the definition of importer exporter, this same logic will make me the importer exporter, that is the custom house agent. So that is what is the beauty of this law. The real importer exporter is you, but you are not covered in the definition of importer exporter. That will come to know when we go to that definition. The board will mean the Central Board of Indirect Taxes Customs, that is CBIC. Customs area. Now this is interesting. Normally, when we use these words, customs area, we would visualize a physical, some area, some place, but that is not the case in customs. See, firstly, you have to understand customs is at the borders. Now, we'll be discussing more about the borders part also. So, customs is at the border, but maybe exactly at the line of the border, there will be few officers stationed, there would be very small office. Again, look at any movie where or a movie showing the scene of villages where there is one small pole just put and two officers sitting and there is one small hut type of a thing made. To that extent is the custom office in those border places. But you have a proper office, a proper building like how you have for GST or income tax. You have a proper building where all the designated officers are posted. Plus, you have different other areas like you have warehouses where customs keep the goods before they are cleared. So all these places together are referred to as custom area as a common term. So custom area will mean the areas of custom station, the warehouses, and include area where imported exported goods are commonly kept. What is custom station? Because custom area includes or means custom station. So custom station means the custom port. airport, international courier terminal, foreign post office, land custom station. So here custom station means all the offices of customs which are used for custom activities. So it may be the port, which is for sea, it may be the airport, which is for air, the courier, because now many goods are traveling through the post route or the courier route, and even the land stations, that is where the land route is used. So for all the modes of transport, we have separate custom offices, which are custom stations, which are included in custom. Then a very important thing for which we have a separate chapter is warehouse. Now, since custom is talking about import export of huge quantities of goods, one ship, one vessel carries so many containers. You would see on the highways if you are traveling that huge trucks carry a container. We call it as container only. One container is loaded on the entire truck, which is a long vehicle. Now, such containers are in number of 10,000, 50,000 on one ship. So you can imagine the quantum of goods being transported by one ship. Now, when so much quantum of goods is landing at Indian port, let us say the Bombay Nhava Sheva port, entire goods cannot be cleared because these goods may belong to thousands of importers who may come one by one as per their convenience to collect the goods or clear the goods. Obviously, they are not coming there, CHAs are coming, but still, that will happen in a sequence. Similarly, at the same time, similar huge tons of goods are exported. So, till the time they are loaded on the ship for export, or after the ship has come, they are unloaded and kept till all the other formalities are done, they have to be kept at some place. So, for that, you have different designated places. You have the ICDs, that is inland container depots, ILCs, inland line customs. So there are so many places, and warehouse under customs has a very important relevance in the entire custom flow that we will discuss when we go to the custom flow. So what it is meaning, there are three types of warehouses which are covered in the customs law. One is the public warehouse, so you can say this is the government warehouse. Second is the private warehouse, which is your own warehouse, which you have got licensed. And then for some specific purpose, there is a special warehouse. So there are three types of warehouses covered today under the customs law. Then you have the most important definitions of import export, because as we discussed, customs is on the import or export. Now, interesting point is if you read the GST law, you have the definition of import export there also, with one difference. What is the difference? Over there, when you read the definition of import and export, it says export with its grammatical variation, etc., means taking goods out of India. And import with grammatical variation expression means bringing goods into India. So in GST law, when you read the definition of import export, which is copied from here only, one difference is there. They have used the word goods also. But here, when I read export, what it says, exports with its grammatical variation cognate expression means taking out of India to a place outside India. Taking what? Nothing is mentioned. Even in import, the same thing happens. Import with grammatical variation cognate expression means bringing into India from a place outside. Copy paste definition is in the GST law with one difference. Over there, the word added is goods. So over there, export is taking goods outside India. Import is bringing goods into India. Now, this is an interesting difference. So even though this definition of customs is very old, and the same definition is used everywhere in all other acts, including the GST Act, which is made very recently. But the GST Act has added the word goods in the definition. Somebody will say why? For the reason which I can comprehend is, when customs law was made, it is by default assumption that entire customs law is only for goods. It never envisaged service, and even today, it is not covering service, import, export. But when you talk about GST law, it is for goods, service, for everything. So maybe to distinguish out that here in GST, when we will talk about import exports, it will be only limited to goods. Why? Because there is another concept of export of service also, which is separate. So in GST law, since they have two types of transactions, goods also, service also, you have two separate definition. So when they are talking about export, it is not only export, it is export of goods, export of service. And the definitions are different. And the most interesting part, now here you'll understand the relevance of that chapter of GST, which is import export under GST. If when we talk about import export under GST, let us say import of goods under GST is fully, I repeat, import of goods under GST is fully as per customs law. Whereas import of service under GST is having no relevance, no reference of customs law. This I'll explain further when we proceed, that when import of goods is happening, even for the purpose of GST law, everything, levy, collection, procedure, everything is as per customs law. GST law has given nothing when it comes to import of goods. But at the same time, when it comes to import of service, everything is decided by the GST law. It has no relevance of customs. So import export says it means taking out of India or bringing into India. What is very important is this part. Export is not merely taking out of India. It is also to a place outside India. So until and unless your goods are destined for a specific place outside, it cannot be called as export. Similarly, import is not merely bringing into India. It is further that this bringing into India should happen from again a destined place outside India. But then we will be countering this when we proceed. But the basic meaning of import export is that there is some place outside. This place can be anything. It is not said a country. Again, important. See, these are very small things when you interpret a law. It is not saying from a country outside India. It is a place outside India. So there is required that both in import export, there has to be some foreign identified location. Now, in all these definitions, we refer to India. What is India? Now, the definition of India, even under the GST law, is very wide. So, besides the land portion, which we normally used to draw in schools, and whenever we wanted to refer to India, we used to draw that land portion of India. Today, also, whenever we see India in any maps or anything, they only show the land portion. But that is not India politically. That is not India as per international treaties and understanding. India, for all political, for all legal, for all taxation purposes, extends even into the waters, and it extends even into the sky. It extends even into the seabed. Now, what it means, I'll give you the relevance. See, when I say it extends into the sky, means what? You would have heard this airspace of India. When we had this Sindoor operation going on, we had blocked our airspace for Pakistan's aircraft. Similarly, Pakistan did that. Many times, whenever there are geopolitical tensions between different countries, a particular country blocks its airspace. What do they mean by block? So today, you are allowed to, let us say, enter Iran's airspace, you enter Iraq's airspace. Obviously, you have to inform them, but you are allowed. But when they say block, so for that period, you will not be allowed to enter them. If you enter without asking anything, they can shoot down the plane. This is what is the relevance of airspace of any country. So internationally also, every country's boundaries extend into the air, which is called as airspace, where if any other foreign uh, aircraft or anything wants to enter, first they have to seek a permission, and obviously this permission is sought very much prior. So all these cargo planes, passenger planes, they give their schedule and accordingly they take the permission so that there is no hassle when they actually enter the airspace. But at times when a particular uh, advisory or some particular this instruction is issued by the government of India, in those periods, a certain country's aircrafts may not be allowed to enter our airspace. That is what our political boundary. Similarly, the political boundary, the taxation boundary extends even into the sea. So to the point in sea where we have our boundaries is called as the territorial waters of India. Now there are two type terms that we should know. One is the territorial waters and the other is the custom waters. Now, what is the difference? So territorial waters is extending into the sea up to 12 nautical miles from the baseline. Baseline is the land portion. So wherever your land portion ends, there is one identified place called as the baseline. From there, up to 12 nautical miles into the sea is our Indian territorial waters. That is, in short, till that area in sea, it is India only for all political, for all taxation purposes. Further, India not only includes the surface of sea in the territorial waters, but also the airspace and the ground beneath the bottom. So, up to that line in the sea, above airspace is also India, and even down, that is the base of the sea, that is also India. Now, what is custom waters first, and what is the relevance? So, we saw from baseline up to 12 nautical miles is territorial waters, but the custom waters is further 12 nautical miles ahead. So, it is total 24 nautical miles into the sea. So, Indian territorial waters is up to 12 nautical miles from the baseline, whereas custom waters is 12 nautical miles into the sea. So what it is saying, Indian custom water covers both Indian territorial waters and exclusive economic zone as well. Now, exclusive economic zone is the area beyond the Indian territorial waters. Now, presently, this exclusive economic zone in many areas is extended up to 200 nautical miles. So, on many of our fronts, this exclusive economic zone is extended up to 200 nautical miles. So, generally, our Indian custom waters is 24 nautical miles, but wherever there is exclusive economic zone which is extended up to 200 nautical miles, our custom waters will be said to be up to that area. Now, how much is 1 nautical mile? So, 1 nautical mile is roughly 1.1508 land measured miles. So, how we measure miles on road? So, nautical miles is the mile in the sea, and 1 nautical mile is roughly 1.15 miles of road. And how much is that? It is 1.852 kilometers. See, normally in India, we measure our distance on road in kilometers. In foreign countries, it is measured in miles. So, for our understanding, 1 nautical mile is equivalent to 1.85 kilometers. So, baseline is the lower watermark along the coast. Continental shelf is that part of the sea floor, that is a seabed, adjoining a landmass where the depth gradually decreases before it plunges into the ocean deep. So, the maximum depth of seawater in the continental shelf is 200 meters. Continental shelf of India extends beyond the limit of territorial waters throughout the natural prolongation of the land territory. So basically, what is the continental shelf? Till you enter the deep waters, that is where the water is shallow. How much shallow it is? It is up to 200 meters from. Means if the water is deep up to 200 meters, that much area is called as the continental shelf. Fine. So this is all the basics of this topic, the introduction. Now we will take a 15 minutes break here, and then we will go to the next part of this chapter, that is Unit 2. Fine. So we'll take a 15 minutes break, that is our designated break, and then we will start with the Unit 2 of the same topic. Anybody has any questions? I can take the questions before we go in for break. Yes, students, anybody has any questions? No? Fine. So if you have no questions, then let us go in for a break. And after the break, we come back to the next unit of the same chapter 1, dealing with levy and exemption of the customs duty. And we will go now more into the details of the customs law. Fine. So let us have a break. We reconnect around 8:30 after this break. We go to the second part of this chapter. So first part was a broad understanding of the overall customs. Now we go to the detailed implications of customs. Just remember the entire backdrop which I've explained. This backdrop is very relevant to understand the essence of many of the provisions that we are going to study. Now, something general about levying of taxes. So when we talk about levy of taxes, duties, there are three stages which makes up the levy. So first is levy. It is the stage where the declaration of liability is made and the person or the properties in respect of which the tax duty is to be levied is identified and charged. Second step is assessment. It is a procedure of quantifying the amount of liability. The liability to pay tax duty does not depend upon assessment. Third, the final stage is where the tax duty liability is actually collected. So the three stages, or you can say the three limbs of levy or imposition of tax are, firstly, levying the tax. So what is levying the tax? Levying the tax is the formal imposition of the tax, or like declaring ki, okay boss, you have to pay tax on this. That is levy. So declaring that who on what is liable to pay tax. How much is not decided by levy. The second step is how much. How much is decided by the second step or procedure called as assessment. So in this step, you quantify the tax. For this, two things are required. To specify the rate. Second, specify the valuation or the mechanism on which this rate will be applied. Both these things together make assessment. Third is the final stage is once this tax is quantified, now how, from whom, when it will be collected. So providing for collection is the third step. So when I'm saying providing for collection, it is more of the procedural part, and mainly it is specifying who has to pay tax, when, how. All this together becomes the collection part. Now, the liability towards custom is broadly based upon three factors. First, goods. So as we discussed earlier also, unlike GST law, which is on both goods and service transactions, customs law is exclusively on import-export of goods. So the first thing that is relevant when we are talking about the customs duty is goods. That is the point and the circumstances under which custom duty becomes leviable. Second, the procedure, the mechanism and organization for determining. Third, the exemption to the levy. So these three things will finally determine, or I'll say crystallize your liability towards customs. Customs duties is considered to be levied on goods and not on the person importing. Now, this is a very relevant feature of any indirect tax. In fact, that is a difference between an indirect tax and a direct tax. A direct tax is always levied on a person, maybe person's income, person's wealth, etc. And hence, the burden cannot be shifted by the person to anybody else because it is on the person itself. Whereas, when you talk about any indirect tax, be it the earlier sales tax, earlier service tax excise, or be it the today's GST, what is important is why these are indirect taxes and why we normally say that the burden in case of indirect taxes shifted. Reason is because indirect taxes are levied, indirect taxes are imposed on the transaction. It is never imposed on the person. And since it is not imposed on the person, hence there is no question of there being responsibility of a particular person. So the law will fix the responsibility, and since it is levied on the transaction, once the goods or service are transferred to the other party, the burden can also be transferred. So this is what is the interesting point of difference between direct and indirect tax. So since we are talking about customs, which is an indirect tax, it is clear that in case of customs, the liability is on the transaction, that is import export of goods, and it is not on the person. Equitability requires charging of duty at the same level if circumstances are similar. This has given rise to a deeming provision under 12. This is the charging section which we are going to study, to provide that customs shall be levied in the same manner on goods belonging to government as well as belonging to non-government. This point again is very relevant. If you observe direct tax like income tax, presently that is only the major direct tax we have. Over there also you have definition of person, and the similar definition is in GST law also. But there is a contrast. In income tax law, the definition of person does not cover central and state government. It covers local, but does not cover central and state government, which means that in the eyes of income tax law, central and state government are not persons. So by default, there will be no income tax applicable on central and state government. However, when you talk about GST law, firstly, the definition of person includes government, both center and state. Secondly, the definition of business, last clause specifically says that even where the government is entering into any transaction in the capacity as a public authority, that will also be deemed to be business. So this is interesting, that even where the government is doing anything not like a businessman but like a government, that is for the welfare of people, still that activity by the government is also regarded as business. So they have expanded it further. This all shows that any indirect tax law considers government at par with a business. Means the indirect tax law will apply equally to both government and to business, thereby creating a parallel, which is correct if you look at the purpose of indirect taxes. Now we come to an important part of any taxation law, that is the charging section. When we talk about the charging section, generally the charging section of every law is very precise and very specific. Interestingly, the charging section of customs law is very broad. Why it is broad, that also we will understand. Importantly, if you see customs, as I discussed at the start, one of the major purposes of custom is control, supervision, surveillance, safety, security of the country and the people and the country assets. Second important, or let us say the main important part, is collection of taxes. Now here I'll add one more thing. When we talk about customs, customs also act as a single window system. What is this single window system? So the single window system is that customs becomes that one point of collection where not only customs, but all other duties and taxes, which may be even state levies, which may be even local levies, can be and are collected. So they can be collected. In fact, they are collected. So customs has also acted as the common collection agent on behalf of many other tax levies. So it is not that customs is collecting duties only for itself. Why? For the same reason, since it is the border of India, since the custom is operating at the very border of India, it is being given the responsibility of ensuring all collections that are applicable. Now, all this is coming through section 12. Second interesting thing about section 12 is, one, it is very broad, for which I gave you the reason. It is not only covering customs, it is covering other levies. Second, very interesting thing is the charging section 12 itself creates exception for itself. So normally this is not found in any other taxation law, at least I did not find it, that the charging section says that except something, this tax will be levied. Generally, it is not there. Means a charging section is not creating an exception for itself. However, custom law does. Now, again, the question is why it is so that the customs charging section is itself creating some exception. The reason is that, as I said, customs law purpose is not only collecting tax but also carrying out surveillance, supervision on everything that is coming in or going out of India. So, firstly, it broadly covers everything. But then, when you cover broadly everything, then arises the need to exclude those things on which you actually do not want tax, but those things were covered only for the purpose of their surveillance or their monitoring. So, that is where the second part applies, that why it has created exception for itself, so that all the things which get broadly covered, out of that few can be excluded. Second reason why it is excluding or creating an exception is because of a practical issue. Now I'll spend few minutes on discussing this practical issue, because this point which I'm going to discuss now is the most important basis for, I can say, the entire customs levy. Now, understand this practical issue so that you will also understand the other aspects of the entire customs, plus this point ki why exception was need to be created in the charging section. Now the practical point is, we just understood in the previous unit the definition of import export and also India. So firstly, levy of customs is on import. Let us keep export aside for the time being. Levy is on import. Definition of imports is bringing into India, and India is extending up to 200 nautical miles in the sea, extending into the air. Now understand this practical point. If I have to apply the law literally, customs duty gets imposed in the sea itself the moment your ship enters that 12 nautical mile, wherever 200 nautical miles. It will not be 200 nautical miles, it will be 12 nautical miles only. 200 nautical miles is for other specific purposes. So when the ship enters that 12 nautical mile boundary, which is a boundary in the sea, import will trigger. Similarly, when an aircraft carrying goods enter the airspace of India, import will trigger. Now, interestingly and importantly, in both these cases, the import is getting triggered in mid-sea or mid-air. Now, it is highly impossible for any country, any department to do your assessment and everything when you are in mid-sea or mid-air. But for that, we always have a solution, that the collection procedures can be deferred and you can collect it when the ship reaches the land portion or reaches the port or the plane lands down. Okay. So for administrative purposes, always the administrative part, that is collection, can be postponed. But there is another practical challenge. This point which I'm going to now explain relating to the practicality of charging section, which will be the basis for many provision understanding. This is based on a real life scenario. So customs law kicked in. We are talking about the present Customs Act 1962. And immediately after it kicked in the initial years itself, an incident happened. What is that incident? Understand it so that you'll understand many other things. So the understanding was that the moment a ship comes into that 12 nautical mile, which is a boundary in the sea, and boundary means an imaginary line. There is no barcading or anything. There is nothing which is set up in the sea to identify that, okay, this is the 12 nautical miles. So it is just an imaginary line. So only for your understanding, you have entered into India, but there is no other relevance. So a ship entered into India, that is that 12 nautical miles imaginary boundary line. And before it could reach to the port, in between, that is in between this 12 nautical mile, the ship sank. Now, when the ship sank, all the goods in the ship drowned, sank, and 90% of them was unusable. So there was no question of it being brought into India. It all, let us say, was dumped in the sea itself in that 12 nautical miles area. Now, let us say I am one of the importers. I was waiting for my goods at the port. But when I got the news that, boss, the ship sank just a few miles from the port. Nobody could do anything because by the time any ships went there to recover, at least the goods, they were all wasted. Now, in this particular case, obviously, I have no choice. I go back. But before I left, the custom authority stopped me, saying that, boss, you had imported goods. Your goods entered the 12 nautical mile, so they have come into India. Definition of import is satisfied. Your goods were coming from UK, that is a place outside India. They entered India, they came inside India because they came inside the 12 nautical miles. So import happened. So customs triggers. I was shocked. I was amazed because one, I have lost the entire goods. Two, above that, you are asking me to pay tax. But if you apply the law literally, this is what is the outcome. I was totally means clueless, plus at the same time agitated that I've already lost. I've incurred such a huge loss. And above that, you want me to add to my loss by asking me to pay the customs duty. So I went against this custom authority order of paying the custom duty in the court. And the matter traveled up to Honorable Supreme Court, wherein series of decisions, starting with Garden Silk Mills, Apar Industry, these landmark decisions created that practical point which we are discussing right now. What is that practical point? The charging section today is still that literal meaning section that customs will be applicable on imports. Imports today are still to define the same thing. Goods entering into India, that is entering the 12 nautical miles line. Please understand this. But these decisions have created a different charging mechanism. It says that we will consider import to start when the ship enters the 12 nautical miles, but not conclude. So what these decisions have finally gave the final conclusion that considering all these provisions, the definitions, and the practical difficulty, the conclusion of charging is that import starts when the ship enters the 12 nautical miles. So how it will happen? Ship will enter the 12 nautical miles. It will sail up to the port. At port, the goods will be unloaded. Till then also, the import has not concluded. The ship after unloading goes under the custody of custom port authorities, which are indirectly also under the control of government like customs, and the goods are under the control of customs. You have to go to the custom authority, make an application to get your goods from the custom authorities. The custom authorities will process the application, check the application for rate, value, exemption, everything, determine the final payable tax. You pay the tax, and then finally the goods are handed over to you. That point in this whole procedure, the point when you make that application to the customs for giving you the goods, which is called as clearing of goods. Remember this term, this will be used everywhere in customs, clearance of goods. So where you have made that application for clearance of the goods, that is the concluding point of import. That is the point where actual customs duty will get attracted. Now, the present scenario is, in the same scenario, if the ship sinks in India, I am saying it is within the 12 nautical miles, I as an importer am not required to pay any customs duty because the import may have started, but the trigger point, the conclusion has not come because I have not made any application for clearance. Second scenario, the ship reaches the port, goods are landed, they go into whose custody? Custody of porters and indirectly under the control of customs. If at that point also Please pay attention because many provisions that we are going to read further is linked to this. So even after unloading, till the goods are in the custody control of the government, that is the port trust and the customs, if the goods are destroyed, stolen, any mishap happens like fire, flood, etc., I am not required to pay duty. Step further. Now I have made application for clearance. But if when I go and check the goods which had landed in the customs warehouse or in those inland custom stations, wherever they are kept, and if I feel that no, these are not the goods which I had ordered, they are not as per my requirement, I am disowning the goods. I am foregoing my rights, my ownership over the goods. Again, I will not be required to pay the customs duty. See the extent of the exclusion from the levy. So if you read barely the charging section, it creates an impression the moment ship enters India, you have to pay customs duty. But because of these series of judgments, the present concluding scenario is that you pay customs duty only when you are clearing the goods. If at any point of time before you clear the goods, if the goods are not in proper shape, if they have not reached you, if you are not getting the goods, the custom duty levy will fail. This is where the exception is required in the law itself, because the charging section creates a levy at the point of entry into India, that is 12 nautical miles imaginary line in the sea, in the air. But practically, we will be levying the customs duty only when you clear the goods from customs. Now, this point which I just explained is going to be the whole basis for so many provisions, the exceptions, the procedures. So I hope you have understood this point. If anybody has any queries, any pointers, please ask me here itself so that your base is clear, your ideology is clear, and we can proceed with the detailings and the technical part. So if anybody has any questions, please put it across. You can ask me now itself.
सर,
Yes.
बिफोर क्लियरिंग करने से पहले भी अगर हम लोग बेच देते हैं, क्लियर करने से पहले हम लोग गुड्स को सेल कर देते हैं, तो भी फिर कस्टम ड्यूटी भरने की जरूरत नहीं पड़ेगी ना सर?
नहीं पड़ती ना. सी दैट इज व्हाट इज द रेलेवेंस. और इसी का रेलेवेंस जब आप जीएसटी लॉ भी पढ़ते हो तो वहां पे आपको एक कनेक्टिंग पॉइंट समझ में आएगा. तो इसीलिए वो जीएसटी के भी शेड्यूल 3 में है. अगर आप जीएसटी का शेड्यूल 3 पढ़ोगे तो उसमें एग्जैक्टली ये ट्रांजेक्शन कवर्ड है कि आपके गुड्स इंपोर्ट हुए, वो आज भी कस्टम्स के पास पड़े हैं या कस्टम्स के वेयर हाउस में पड़े हैं, आपने अभी तक वो क्लियर नहीं करवाए हैं, तब तक अगर आप वो गुड्स बेच भी देते हो तो भी, क्योंकि आप उसे क्लियर नहीं करवा रहे हो, आपको कस्टम्स ड्यूटी नहीं भरनी. कस्टम्स ड्यूटी नहीं भरनी तो उसके साथ जो आईजीएसटी है वो भी नहीं भरना है. This is where I have given you all this backdrop to understand all these pointers easily. So you are right, Yogesh.
ओके.
Geet is saying reversal of ITC also. Geet, अभी उसमें नहीं पढ़ते हैं because see, unnecessary will be complicating too many things, because from here then I'll have to take you to input tax grade logic. So what you are saying is right. I accept that, but I will not deliberate on that because otherwise it will be going off the track. So right now we are on levy. So let us confine ourselves to levy. Let us not get into the ITC reversal. But what you are saying is right. So I give confirmation to your point. I agree to what you said. Now we read the charging section. It may not be the bare section, but it is covering the pointers which are there in the section. So what does the charging section says? This section is the charging section which says what? So the charging section itself creates an exception. What it says, except as provided in this act. And I've already explained you what these exceptions are. So despite of this charging section creating levy at the point of entry in India, for all these scenarios, still you clear the goods. If there is any loss, there is any uh, disowning by you, in those cases, you will find specific provision saying that no customs duty has to be paid. So that is why this exception part is required. So except as provided in this act or any other law for the timing in force, duties of customs. Now when they will be levied, firstly, they will be levied at the rate specified in the tariff. Interestingly, or any other law. So this is where the IGST tariff will be used for levying the IGST portion on import, because it is also referring to any other law. So as I said, customs is a single window system. So many taxes like in the earlier era, excise, VAT, all these were collected at the customs stage itself. So that, because see, whenever goods are imported from outside India into India, if they are manufactured, excise is applicable. Since they are being purchased into India, sales tax is applicable. Plus, there are so many local taxes, they are also applicable. So all these were collected at the point of customs itself because of this part, that what rates specified in the customs tariff act or any other law for the timing in force. And this levy is created on goods imported into or exported out of India. And then again, the charging section is bringing parity, because subsection 2 says that the provisions of charging section, which is given in subsection 1, will apply to all goods belonging to government as they apply to goods belonging to non-government. It means even if government imports something, government is equally liable for customs in the same manner how a private person is liable. It means the government is not excluded from the charging section. So same like how I was explaining how GST law has created levy on the government also. In the same fashion, the customs law in the charging itself creates levy on government. If you go to the earlier VAT laws, in the definition of dealer, they covered government. So indirectly there also, they are asking the government to pay the tax. So firstly, all indirect tax levies are created on the government equally like non-government, that is private persons. But yes, because government is doing many things for the benefit of the country, for the running of the country, for the development of the country, so that is where there could be specific exemptions, but that is only where a specific exemption is given. Now we go to the decoding of this customs charging section with the help of this analysis part. So first is about the charge. The charge is to be created on the goods and not on the person. You will nowhere find the reference of importer or exporter in the charging section. It simply says the levy is on import of goods, export of goods. So it is always the transaction which is levied with the indirect taxes and never the person. Yes, person is referred only in the next part where we want to do collection. So as you saw, we have three limbs in imposition: levy, assessment, collection. Only for collection, reference of the person is given as to from whom the tax will be collected, but levy is not created on that person. And since it is not created on the person, hence, like a common feature of indirect tax, the burden is generally passed on to the buyer. Next, what is the taxable event? The taxable event is the importation into India or exportation. However, there were a lot of problems faced in determining the exact point when importation happened. Why? Because it happens in India, because of it happens in the water or the sea or the air as per the definition of India. Hence, practical problems were created. And as I was explaining, we had a series of landmark judgments, starting with the Garden Silk Mills case. Then you had the Apar industry case, multiple cases in which what has been crystallized. So the Honorable Supreme Court observed that import of goods starts when the ship enters the 12 nautical miles line, but continues and is completed only when the goods becomes part of the mass of the goods within the country. Now, this is what is the language of Honorable Supreme Court, which is finally interpreted to mean when you file the bill of entry, which is the application to clear the goods, and only when the goods are cleared, they will become part of the mass of goods within the country. So the taxable event being reached not at the line in the sea or in the air, but at the time when the goods reach the custom barrier and bill of entry for home consumption is filed. So until and unless you're filing this bill of entry, which is the application for clearing your goods, and until unless this is for clearing the goods for home consumption, that is bringing to your factory, bringing to your office, bringing to your house, there will be no tax. Similarly, in other cases like Apar Industry Limited, Kiran Spinning Mills, what is given now? This is about the goods which are in the warehouse. Again, till the goods are in the warehouse, they are still under custom control. No levy is there till the goods are in warehouse. So, in case of warehouse goods, the goods continue to be in customs bond. Hence, import takes place only when the goods are cleared from the warehouse. Because still they are in warehouse. Which warehouse? The custom bonded warehouse. They are still under the control of customs. They are still not to be treated as part of the mass of goods in India. And until unless they become part of the mass of goods in India, there can be no tax. So the taxable event occurs when goods cross custom barriers and not when goods land in India or even territorial waters. Export will be completed when finally the ship goes out of India. Now, now we talk about more technical terms in customs. So now I'll explain you briefly how custom procedural flow is. So when a ship wants to enter into India, now pay attention to certain terms which I'll be using because these terms will be used later and they will be relevant to understand the provisions of customs. So when a ship enters India, before it is reaching a port, the master of the ship has to send a request to the port authorities, to the custom authorities, both are different, but it will be sending a request to the authorities. One, to the port authorities, it is sending a request seeking permission that I'm coming, this ship is coming. I want your permission to land at the port. Similarly, a flight, when it wants to land at an airport, it seeks permission from the airport authorities. Only when they give clearance, a flight can land, and similarly, a ship can come and park in India. Now, this is what is relevant when a ship is coming or entering India. Second step is even if the custom authorities, even if the port authorities have given them permission, it is only the permission for the ship to come and park, for the flight to land. That is not sufficient. The very important permission is to be taken from customs. Now I'm giving the technical terminology. Remember that it is called as the entry inward permission. Now the name suggests that the customs are giving you the permission to come into India, but that is not the case. Customs is not giving you the permission to come into India because that permission is given by the port authorities, considering the space constraints, etc. Entry inward permission, which will be coming as one of the definitions also, and you will have specific provisions, is basically the permission which you are taking from customs for unloading the goods and passengers at the port or airport. So when a ship is coming into India, it is seeking permission from both. Now for us in customs law, we are only concerned with the second permission, which is called as the entry inward permission. In this entry inward permission, basically the custom authorities will assess where are you coming from, what are you carrying, who all are coming on your ship or in your aircraft. And if everything is fitting in the Indian laws, in the government's latest notifications, advisories, then only they will allow you to unload. So let us say you are coming from a country where there is some pandemic going on, or where there is some latest, some new virus. Just a minute, please. Okay. Now, the permission is called as the entry inward permission. Now, what is this entry inwards? So, if your ship, your aircraft is coming from a country where there is some virus spread, and presently the government has issued an advisory to not allow any person coming from that country or any goods coming from that country, just as a precautionary measure, then you will not be allowed the permission of entry inwards, which means that maybe for some safety reasons, the flight may be allowed to land on the runway, but you will not be allowed to unload passengers and goods. Similarly, second thing is entry inward permission is where you are carrying certain goods, and let us say those goods are prohibited in India, again for the purpose of safety, security. Again, for the same reason, there may be a prohibition, a blocking. So the custom authorities will not give you the permission of entry inwards. So in all these cases, the entry inward permission is not given. Now the question is, how will the custom authorities know what goods you are carrying, what passengers are coming? So the procedure provided in the customs is that when a ship and aircraft is approaching India and seeks the permission of unloading its passenger and goods, it will have to first submit a document. Now pay attention. The document is called as the import manifest or the import report or the import general manifest. Now, what is this import manifest, import general manifest, import report? It contains the details of, or it is the list of all the goods, including the baggage, including the spare parts, everything which the ship, the aircraft is bringing. This list gives the custom authorities a detail of what all it is carrying. Plus, it also has to specify from which places these goods are loaded, or while coming, which all ports this ship, this vessel, this aircraft touched before entering India. Further, there is another list which the master of the vessel aircraft has to submit again before they unload the goods. So nowadays, because of online, everything is given beforehand. It is the list of passengers who are traveling. So again, if there is any person whose entry in India is blocked, or if the persons are traveling from a particular country where there is spread of any virus, etc., the entry inward permission may not be granted either in full for the entire aircraft vessel, or it may be granted selectively that only certain type of goods or passengers may be unloaded, others may not. So the procedure is that before entering India, they seek this permission so that after entering without any delay, the passengers, the goods can be unloaded. Now let us say the ship comes inside. Through the port permission, it gets the parking permission, the landing permission, the docking permission, and through this entry inwards, it gets the permission of unloading. Now, after unloading, the most important point is when goods are unloaded from a ship, aircraft which is coming from outside India, the goods never are given to the importer directly. The goods are with or under the custody of the authorities. The authority is the Port Trust Authority. Again, a word I'm using, custodian of goods. The Port Trust Authority is called as the custodian of goods, and general rule is after these are unloaded up to 30 days, the port trust will be safekeeping the goods, and this 30 days is the time allowed to you to clear the goods. When these goods are coming to India, they are getting unloaded, they go into the custody of the port authorities. The port authorities will be taking care of these goods until you, that is the importer, gets it cleared. So now the goods are under the custody of port authorities. You have 30 days time to clear it. Now, what is your role? As an importer, you have to get these goods cleared. How? The document which is used is bill of entry. You file a bill of entry. Now again, we will study in the procedures that for some cases, the bill of entry has to be filed even before the ship comes. For some cases, the bill of entry file can be filed after the ship comes. So again, those are part of procedure, but what we are understanding now is broadly the procedure. So importer files bill of entry. Actually, remember when I'm saying importer, it may not be you, it may be the CHA. You are the beneficial owner, right? I hope now you remember that definition and the relevance of that definition. So coming back to the point, the importer files bill of entry. Now, when this importer files bill of entry are different in customs. There are different bill of entries. Pay attention. Slightly, we have become very technical, but that is relevant so that whatever we are going to study, that should match with you or you should be able to absorb it. Still, wherever you feel anything is going too heavy, you can tell me. Now, there are three types of bill of entries that an importer may file. One, bill of entry for re-export. So these goods are coming, but you don't want to take it into from there itself. You will send it to some other country, maybe in the same form or by just changing the packing. So that is what is for re-export. So here, when you file bill of entry, you are intimating them, ki, sir, I'm not going to clear it from here itself. I'm sending it in few days to some other country when the ship for that country leaves. Second bill of entry is the bill of entry which is called as bill of entry for home consumption. This bill of entry for home consumption is the main bill of entry through which the goods are actually taken by the importer to his factory, to his house, to his shop, which is the main or the final clearance of goods. So this term for home consumption is very, very important. So what is bill of entry for home consumption? Bill of entry for home consumption is finally, ultimately clearing the goods and taking it with you, which is the ultimate point for levy of customs. Remember this. So this term, clearance for home consumption, is very relevant. But there is one more facility. I'm using the word facility, that let us say my goods have landed at Bombay port. I have 30 days to clear. But since the goods have come in huge quantity, let us say I have imported 2 container load of goods. Now I do not have that much space in my factory, point number one. Second, I will obviously not be able to use the entire goods immediately in my production because my production will happen in batches. Now in both these cases, I do not want to clear the entire goods immediately, because if I clear the entire goods immediately, I'll have to take it to my factory. So there will be space issue. Plus, I'll have to pay the entire custom duty upfront. Instead, what I can do is I can use a facility which is called as clearance for warehousing. Interestingly, I am filing bill of entry requesting them to remove the goods from the port trust. That is the port. Why? Because over there I have a 30 days window to clear. Otherwise, my goods may be, what do you say, confiscated. Actually, confiscated is not the right word. I'm not getting the right word, but it means the port trust may take over your goods and then through auction may sell it. So I don't want that to happen. So I want it to remove from the port. So I'm filing or using this facility whereby I'm filing bill of entry for warehousing. What will happen? The goods will be removed from this port, and from there they will be shifted and kept in a customs warehouse. This customs warehouse may be exactly next to my factory in my city. So at the start, I was giving an example that you are an importer from Madurai, your goods are, the ship is going to unload the goods at the Bombay Nhava Sheva port. So from there, you bring the goods in Madurai. Let us say there is a customs port in Madurai, customs warehouse in Madurai. So these goods are now physically in India. These goods are exactly next door, next to your factory in a warehouse. Still, pay attention, still there is no customs duty payable. Why? Because until these goods are cleared from the customs fully finally, which is only by way of clearance, which is called as for home consumption. So until these goods are finally cleared for home consumption, until then, the import is not complete. Until then, the liability is not crystallized. So where you remove the goods from port, because after 30 days, it will be a challenge for you. So you are removing the goods from port and keeping it still with the customs in the custom warehouse using the warehousing facility. See, one is a regular warehouse. When you keep the goods in regular warehouse, it is your goods, it is goods under your control. But when goods are in under customs warehouse, using the custom warehousing facility, the goods are under the control of the customs only. So in such cases, we do not say that the clearance is done. So please understand and appreciate this point. Today, the goods are lying in India, very much in India, and next door to your factory. Still, there is no liability for customs. Why? Because the levy, which we discussed in above cases, has not triggered because you have not cleared for home consumption. So this is what is the distinction, that goods may be removed from the port to be shifted to custom warehouse, which is called as clearance for warehousing, and there will be no duty liability. Yes, to safeguard the interest, when they are shifting these goods, they will ask you to give a bond which covers 3 times the amount of duty. So that is only a procedural part. You don't pay the duty, you give them a security, a bond of the value of 3 times of the customs duty on those goods, right? Now we come to some very interesting point. Special circumstances levy. Now, why these provisions are created again? See, we will see two types of provisions. So first we saw the general charging section, which says levies on import export, which is then modified by the case laws to say that final levy will be only when goods are cleared, which is clearance for home consumption. Now, we will see two types of provisions. One, where the levy is created even without this charging section requirement being fulfilled. One. Two, the exceptions to this levy where all these charging section requirements are met, still the law has said don't pay tax. So these are the two provisions that we are going to see. Out of this, the first is levy in some special circumstances. Now in this category, we will study those provisions where there is a levy, but that levy, pay attention, there is a levy, but that levy is not as per the charging section, that is created even without any of the requirements of charging section being met. So what are these and why are these provisions made? We will try to understand. Now, first heading, as you can see, which is under section 20 of the Customs Act, is re-importation of goods. Now, first, let us understand what is the meaning of re-importation. See, generally, whenever we use this word re, it means what is done already, you are doing it again. Like if I say re-importation, it should mean the goods were already imported earlier. Again, they are re-imported the same goods. That is not the case here, because see, once if something is imported, how you can re-import the same thing again? Obviously, the whatever you will import will be other goods. Here, re-importation means what? So let us say I had sent a machinery outside India. Why? For repairs, for some modification. And that machinery, after repairs modification, is brought back to India. So I only had sent the machine outside and I am only bringing back the machinery. This is what is called as re-importation in this section 20. That is, the goods which were earlier exported by me are brought back. This is what is re-importation here. Now, what is the special point? Now, if the goods were sent outside and I'm bringing back the goods, a question will arise whether there should be any customs duty. So firstly, section 20 clarifies, yes, the goods which are re-imported reimported means after exportation, they are brought back to India, will be treated at par with the goods which are coming for the first time to India. It means, firstly, Section 20 says there is no bhedbhav, there is no any type of distinct treatment given to goods exported and brought back in India. So they will first be passing through the same test. They will be leviable to the same duty like how first time imported goods are happening. However, certain concessions are given to them, which is the main special point. Now, why are these concessions? Let us first understand. So the answer is very simple. See, what you exported, if you are bringing back, then the question is why there has to be any import duty, because originally these goods are from India only. Because you had only sent it in the first place outside India. And if you're bringing it back into India, where there is any new import or new goods coming to India. So keeping this logic in mind, what does the law says? Law says that we are giving you concession. How? That we won't be taking the full duty from you. Then what will happen? That is given in various scenarios. This is what is the special point. So if a goods is coming to India for the first time, entire duty has to be paid. But if goods which were exported are brought back into India, there will be some concessional duty paid. What is that? That is what we are understanding. So first, you had exported goods, and at the time of export, we all know there are many benefits, incentives, concessions given by the government. So first scenario is when you exported goods, you had got the benefit which is provided by the government in the form of various concessions, various incentives, or which is called as drawback. Now, when these goods are brought back to India, on which you had claimed drawback, you had claimed any type of incentive, etc. What is the special provision? You don't have to pay full import duty, but you have to only return back the amount of incentive which was given to you at the time of export. So first scenario is at the time of export, you were given various incentives, benefits. Now the same goods are coming back. Give back our incentive. This is what is the special point. So what are these incentives? You claim drawback, you claim refund of GST paid, or under bond you had exported without payment of IGST, or under duty exemption scheme, advance authorization, etc., or you had claimed road tap benefit, or you had claimed ROSTCL benefit. In all these cases, whatever benefit you had taken shall be returned back to the government. So all the amount incentives what which was given to you at the time of export has to be paid at the time of their reimportation. This is what is the point, which I hope you understood the logic. What is the logic of this? Further, it says in case of point 5, that is this case where the goods were exported under some duty exemption, amount of IGST and cess leviable at the time and place of importation of goods subject to specified conditions. On such goods, IGST and wherever applicable compensation cess shall be levied. Next, what is the second scenario? Second scenario is you had not sold the goods outside, you had sent the goods outside, but for what purpose? For the limited purpose of repairing. So if you have sent the goods outside, not as a sale, so definitely the first point will not apply because government will not give you any concessions. Here, you had sent the goods only for the limited purpose of repairs. Now, after repairs, when the goods will be brought back, that is, they will be re-imported into India, the concession given is, let us say I sent my machinery outside, the example which I was giving, the value of machinery is 500 crores. Now it has been repaired, modified, renovated, and brought back, on which I spent only 20 crores. Now, if I apply the normal custom provisions, customs duty should apply on the entire 500 crore because that is what is the value of machinery. But this is where this concession comes. Since I have myself sent the machinery outside and the same machinery is brought back, there should be no duty on this 500 crores, that is the value of the machine. Then what will happen? The law says we will ask you to pay duty only to the extent of the repair charges. So, to the extent of the value of the re-imported goods after repairs. In short, this 20 crores in my example, which is the cost incurred for repairs renovating your machine, on that only you have to pay the customs duty. So how that will be worked out? It will be made up of the fair cost of repairs, including cost of materials used in repairs, including insurance, freight, charges. So you have to not pay the duty on 500 crores, which is the value of the machine, because that was sent by you in the first place. You only pay me the value towards the repair or whatever expenses were incurred for getting it repaired. That should be sufficient. So in my example, it is 20 crores. Third, goods other than those falling above, no duties to be paid. So I'll give you example of this. So I had sent goods outside for displaying in some exhibition. So neither it is falling in one nor in two. One is where I sold. No, I have not sold. Two is where I have sent out for repairs and brought back. No, that is also not the case. So this third scenario covers the case like goods sent for exhibition, goods sent for showing it as a sample, or goods which were sent, they were sent as the first initial prototypes. So all these are the cases which do not fall in one and two. So when such goods are returned back or brought back to India, neither you have got any incentives nor you have incurred any extra costs on repairs, etc. So now you don't have to pay any customs duty on their reimportation. Now, when the above concessions would be given, for that certain conditions are put in. The maximum time limit given for bringing back the goods, that is reimportation, is 5 years, which can be further extended up to 2 years. Further, in case of Bhutan, the time limit is 7 and it can be extended for further 3 years for machinery equipment, so it will become 10. Next, in case of goods exported under this DEEC, Advance Authorization, etc., or any scheme of Chapter 4 of Foreign Trade Policy, such time limit is 1 year, which can be extended by further 1. Second condition is, in order to get the above benefit, you should be able to prove that the goods which you had sent outside, the same very goods are coming back. So it should not happen that I have sent goods A, they were consumed over there. So the same type of goods are sent, but they are new goods, that is B. So I have sent a mobile phone which has a IMEI number of 1000. That goods were used or let us say stolen somewhere. So for returning back, the same model is returned, but the IMEI number is 20000. That will not suffice. So exactly the same goods which I have sent outside should come back. Third, there should be no change in ownership, means these goods should never be sold. They should always remain under my ownership. Further, the above concession would not apply if reimportation had been exported by 100% export oriented. So if in the first place the export was done by these people, the reimportation above concession will not apply. Next, reimported goods had been exported from a public or private warehouse, or reimported goods which fall under fourth schedule to the Central Excise Tariff, that is tobacco products, etc. In short, for these three scenarios, above concessions are not applicable, so you have to pay full import duty. Next, clarifications regarding applicability of notification 45, dated this on goods which were exported earlier for exemption purposes, sorry, exhibition purposes. So what is clarified in this particular circular number 108? It says that the activity of sending goods, taking the specified goods out of India for exhibition or on consignment basis for export promotion. So for these goods, Firstly, since they are not sold, it does not constitute a supply under GST as per Section 7, as there is no consideration at that point. Since such activity is not a supply, it will also not be a zero rated supply. So this is what is the clarification now. No IGST is required to be paid for specified goods at the time of taking these out of India, the activity being not supply. Hence the situation of modification 45. What is that? Goods exported under bond without payment of IGST, requiring payment of IGST at the time of re-import is not applicable. So what is simply clarified here is that where goods are sent outside for exhibition purpose, for display purpose, and the same goods are brought back, there will be no IGST. So it is clarified that such cases will fall more appropriately under the residuary entry, which we saw above, which says that on import, the tax liability will be zero. Now, second is exemption to re-import of goods and parts thereof for repairs, reconditioning, reprocessing, etc. Now, what is this? Above we were reading re-import where I had sent goods, which is coming back. Now here I am talking about re-export. What is re-export? So here first import is happening, and after doing repairing, renovation, I am going to re-export the goods. So here, if some goods are coming to India, why? So that they could be repaired, renovated, and sent back. That is what is covered here. I hope you understood the difference between the first one and the second one. Now you'll say, sir, if the goods are coming to India for repair, renovation, and then going to be sent back, why are we calling it as re-import? Because these goods which are coming India were again those very goods which sometime back I had sold. So let us say from India, many exports are happening. Let us say today nowadays we are selling many of our defense equipments. So we have sold defense equipment to many of these countries like Bhutan, Sudan, so many countries. Now, in one of the consignments, there is some technical defect because of which they want us to repair, correct that technical defect. So I first exported the goods to Bhutan. I first, let us say, exported the goods to Singapore. When the goods reached there, after using it or after testing it, they found some technical defect. So they contacted us. We said, okay, no problem. You send back the goods. We will repair it, and we send it. So here, my own exported goods are coming back for what purpose? For repairing, renovating, reconditioning purpose. That is why the term re-import is used. Now, in such case, since they are coming in India, so that they could be repaired, rectified, and I'm going to resend it. So on this re-importation, there is no custom duty at all. So what are the conditions or pointers? Goods manufactured in India, re-imported for repairs. Time limit for re-importation. So after I have sold it, it should come back, or it should come to India within 3 years. In case of Nepal, Bhutan, it can come to India in 10 years. And after I have repaired it, I should re-export it within 6 months, extendable to 1 year. 6 months or 1 year from which date? From the date of re-importation. The ACDC of customs satisfied that the same goods which had come to India for repairs are going back, and the importer at the time of importation executes a bond, because when he's importing and he's not paying any custom duty, he has to give some bond or assurance that if there is any non-compliance, he will be ready to pay the duty. Second scenario is goods manufactured in India and re-imported. For what? Reprocessing, refining, etc. Here the re-importation should happen in 1 year, and for re-exportation the same timeline of 6 months extendable to 1 year is given. Third scenario is specified goods manufactured in India and re-imported into India for repairs. Here for re-importation timeline is 7 years, 10 years in case of Nepal, Bhutan, and for re-export it must be re-exported within 1 year of the date of re-importation. ACDC must be satisfied that the goods are same, and the importer should give a bond at the time of importation. So, in all these scenarios, there is a concession on re-importation. Why? For the obvious reason that here our intention of re-importation is not using the goods in India, it is re-imported into India temporarily. So this is the first special scenario, which is re-importation. Now we come to special scenario, which is given in section 21. What is this? Let me first explain you what it is and what is the purpose of this section. So it applies to goods which are derelict, jetsam, flotsam, wreck. Now, what is this? See, normally, what is import? Import is when goods are sold. Thus, where the goods are sold by a person who's outside India to you who is in India. This is what is normal, regular import. Now, if you see the charging section will apply only when the goods are coming to India from a place outside India. Now, there is a typical scenario, as you can see in the image. Many times it so happens that there is some tragedy in the sea, there is some accident, some mishap, because of which some ship or the goods on the ship are drowned. Or at times, when the ship is sinking, the goods are thrown in the sea, and either they may be floating or they may have submerged. Now, such cases are called as jetsam, flotsam, etc. This is not only for the goods, but it is also for the ship itself. So when a ship is has met with some accident, so there is a possibility that the ship breaks down and the parts of the ship are either floating or have drowned. Now, interestingly, let us again visualize a scenario. You have gone into the sea, either for fishing or something like this, or let us say you are one of the ships which is coming from outside India to India. On the way, you find these goods which are either floating or you come to know that there is something drowned and you get those goods lifted. Please understand this. Please visualize this. Now, interestingly, when you bring these goods to India, technically, the charging section does not apply. Why? Because you will say these are not in import in the first place. Why not import? Because you have not brought it from a place outside India. You found it in the sea, which you can very well prove, showing the condition of the goods. Another scenario is, let us say you are on Nariman Point Beach or you are on the Juhu Beach. So these are different famous beaches in Bombay. You have just gone there for a morning walk, and when you are standing facing the sea, enjoying the morning air and the feel and the look of the sea, you suddenly find some goods which are coming to the shore by the tides of the sea. Now, this happens many times where these goods were originally, like as you can see in the image, the some ship had drowned, so these goods were originally being imported by the ship, but because the ship drowned, the goods were jetsam, flotsam, and now because of the tides of the sea, the water is bringing them to the shore. Now, again in this scenario, interestingly, these goods are not technically classified as import goods. Why? Because you have not imported them, nor is it coming to India from a place outside India. It is coming because of the sea tides. The sea tides are bringing the goods to the shore. Now, if you collect these goods from the shore, second example or first example, where you had gone in for shipping or you are on the way back and you collect them in the sea, can it technically fit in charging section 12? Answer is no. And if it is not putting in the charging section, if it is not import, there can be no import duty, logically. Accepted. But then there is a challenge. What is the challenge? Again, if you look at the practicality, just watch 1980s or 1990s movies, maybe made now, but depicting that era. So we have those smuggling uh, movies where smuggling is shown, especially the sea smuggling during these 1980s, 1990s era, where it was shown that a lot of smuggling used to happen through sea. There were varied reasons why smuggling was more at that time and not so much today. We will not get into those reasons now because of the paucity of time. But at that time, you will see all those movies like Once Upon a Time in Mumbai, Once Upon a Time in Mumbai Dubara. These are multiple movies in which a common thing which is shown that the gangster in these movies is involved in sea smuggling. Now, if this section 21 is not there, what will happen if any goods are found in the sea or if they are coming on the shore through the tides of the sea? There will be no customs duty. And this was, not saying could be, this was used as one of the tools for evading tax. How? These smugglers, the ships of these smugglers, used to come near the shore and near the shore, but not reaching the shore. Near the shore, these smuggling ships used to come and they used to throw the goods in the sea. And then some small boat would go from the shore into the sea and take the goods and come back. Now, even if on the way any custom authority stops them, they can always give an excuse, ki, sir, I had gone into the sea for, let us say, surfing or something, which is very much allowed. And I found these goods in the sea, and I can very well prove it. One, because this is a small boat, it cannot be coming from outside India. I am a citizen of India. You can very well verify and check and get the proof that this is not coming from outside India. It means I can very well prove that in the morning I'd venture into the sea for some small trip in the sea or for some skiing, something, or fishing. And on the way back, I found these goods. Or I can always prove saying that, see, these goods had come to the shore automatically, and I'm just carrying these goods. So there is no import, no customs duty applicable, and I could easily smuggle in goods without the need of paying tax. These can be applied for tax evasion. To cover such scenario, Section 20 is in place. So Section 20 is in a way creating a special charge whereby even though technically import cannot be proved, but for all practical reasons, it will be taxable at par with imports. So even where the goods, as you can see, are derelict, jetsam, flotsam, wreck, which are brought or coming into India. So it is automatic. Nobody has imported. They shall be dealt with at par with imported goods. It means they will be levied to duty and tax would apply to them until and unless the custom officer feels that they should be exempted. So what are these terms referring to? Direct, this refers to any goods cargo abandoned in the sea with no hope of recovery. Jetsam, this refers to goods jettisoned from the vessel. Jettison means thrown into the sea. Flotsam is jettisoned goods which continue floating in the sea. Wreck refers to cargo vessel property which is cast ashore by tides. So in all these cases, maybe because of some accident, mishap, the goods, the cargo, the vessel is in the sea, either floating or it is coming to the shore by the tides, and these goods are brought into India. Now, the third special scenario over here is what it is called customs import of goods at concessional rate for specified end use. Now, what is that? See, in customs law and even in the old excise laws, there was a concept called as end use based exemption. Now, presently, such things are avoided in GST law, but in the old law, this was a common feature called as end use based exemption. Now, as the name suggests, what it is, end use based exemption is wherever the law is creating some benefit on the basis of what will be the final use. I'll give you a few examples to explain what is its relevance, specifically, let us say, in case of customs. Now, In case of customs, we already saw that government is treated at par with any other. Now, if some goods are being imported, maybe by government or maybe by private persons, and these goods are to be used or supplied for a specific space mission which is being developed by NASA, which is being developed by ISRO, or let us say it is their joint collaboration. Now, in this particular case, when some goods which are part of this joint space mission are being brought into India, sent to India, in that particular case, no government would like to tax it. Why? For the same reason that it is something, one, which is important for a country's space mission. Second, it is also important for country's prestige because we are creating a name outside in the outside world because we are able to have successful missions in the space. So for these reasons, let us say the government decides that we want to give benefits, and obviously the very first benefit would be duty-free imports. But then these benefits are subject to the condition that these goods should finally or ultimately be used for that particular project only. For such reasons, specific rules are created like you have in front of you, which is import of goods at concession rate or for specified end use. This is also called as end use based exemption. So in this particular case, a whole set of you can say a code is created whereby you will be allowed concession for importing such goods into India, obviously subject to compliance with some procedure. Now, what are the procedure? As you can see in front of your screen, Rule 4 says that importer should give prior information. So let us say if government is importing, or for that matter, today now you would be knowing that in India, our space mission has grown to such an extent that you have private agencies who are involved in launching spacecrafts into the space, carrying various loads. So even besides the government ISRO, the government agency ISRO, we have even private agencies doing the same thing. So whoever does it, because our purpose is the end use. So for that, firstly, the importer has to give prior intimation information to the respective authorities. Obviously, what information is to be given, the list is given. It is basically given information about the nature of goods, from where it is imported, for what purpose it is imported, etc. Then, on acceptance of importation and import of goods concession rate, identification number will be given. However, such information may be updated on the portal in case of change. That is okay. The importer who intends to avail the benefit shall submit a continuity bond. So you'll give a general bond which will be continuous because your importations will also be happening on regular basis. Then the next part is the importer who intends to avail the benefit shall require to mention this number, that is the identification number given above, and the continuity bond number in all your bill of entry filing, so that the customs will come to know that okay, this particular import consignment is for this particular purpose only. Then the DCAC of customs at the port shall allow the benefit of this notification, and where the bill of entry is cleared for home consumption, the bond submitted gets debited automatically because you are getting the benefit. Next, the importer shall maintain record. What records? That what quantity was imported, where it is stored, how much of it is used, how much of it is balanced, etc. And the importer shall submit a quarterly statement on the portal about these information, what imported and how used. Next, procedure for allowing imported goods for job work. Again, today India is slowly and steadily becoming the back end for many big industries outside. So either we manufacture ourselves, but many times if we are not manufacturing, at least we can do the back end work like the job work. So to promote that also, you have this end use based benefit whereby where goods are imported into India specifically for a particular type of job work, that is also covered here. So for that, again, similar procedures are given. The importer shall maintain a record of goods sent for job work during the month. The importer shall send the goods to the premises of job work under the invoice through electronic waybill. Maximum period for which goods can be sent to the job worker is 1 year. So all this is borrowed from the GST law, because whenever goods are sent for job work, 1 year is the timeline. Then the job worker shall maintain an account of receipt of goods, manufacturing process undertaken, wage generated. Then produce the account details before the jurisdictional commissioner officer, and after completion of job work, send the processed goods to the importer or to another job worker. Fine. Now, procedure for allowing imported goods for unit transfer. Again, wherever these goods which are originally imported, maybe it may be imported in your unit which is in Tamil Nadu, but later on for some work it has to be sent to your unit in Karnataka. So proper procedures are given for that. Then procedure for supplying the imported goods finally for the end use. So let us say now, after doing all these processing, job working, internal manufacturing, now my final product is ready to be sent to ISRO or to a particular recipient for the particular end use. So again, proper procedure has to be complied with, because this will be my concluding point to ensure that yes, I have finally used the goods for that purpose. So I am now finally entitled to the benefit. Second, re-export or clearance of unutilized or defective goods. So whatever goods had come to you, if by chance they are not usable to you, you may send it back. And obviously to that extent, the duty may be waived. And then finally is the recovery of duty in case you are not able to comply with any of the above procedures properly. So this is how you have the entire end use based exemption rules. Next, procedure, mechanism, and organization for assessment of duty. Now, for assessment, what is required? First is determining the quantity, and on that basis, the value. Then the proper tariff classification, so that you get to know the appropriate rate of duty, or if there is any exemption, abatement, etc. applicable, and also whether the goods are cleared for home consumption or for deposit in warehouse. For valuation, we'll study section 14 in chapter 4. Then for relevant date, we'll be studying section 15. What is this relevant date? Like how we have time of supply under GST to determine in which month you have to pay the GST. In a similar fashion for import, because the import procedure or the import routine may be spread over a period of time. So which date is the relevant date for deciding the rate of customs duty and also the tariff value? So that is provided in section 15. What does section 15 says? Where the goods are entered for home consumption, what will be the date which will be the triggering date or the date of which you will apply the rate of duty? It is the date of presentation of bill of entry, that is your application, or the date of entry inward, whichever is later. If let us say I have filed my bill of entry on 1st of November, but the ship is granted entry inwards today, that is 7th of November, which date will be applicable for determining the rate? It will be today's date. If let us say today the ship has entered, but I filed my bill of entry on 10th of November, 10th November's date is relevant. Next, goods cleared for home consumption after they were warehouse. So initially you did not clear the goods, you just removed it from port and sent it to your Madurai warehouse. Now finally you want to clear it from the warehouse for your home consumption. In such case, what is the date relevant? It is the date of this bill of entry, which will be for home consumption. So now when you want to remove the goods from custom warehouse, you again file a bill of entry for clearing it for home consumption. The date of this bill of entry is the relevant date. And in all other cases, the date of payment of duty. Now comes the second part, which is dealing with remission, abatement, exemption. Now, as we discussed, the customs law charging section itself says that subject to some exceptions. What are these exceptions? Where even though the goods are imported, but we won't be collecting or levying the tax. That is what is covered in this part. That is remission, abatement, exemption. First is section 13. Now, 13 covers a scenario where the goods are pilfered. Firstly, what is pilferage? Pilferage means petty thefts. So let us say a carton, that is a box, is imported, which is made up of small pieces of your goods or commodity. Means one carton, 100 small packets of your goods are stuffed, are packed. Now, if out of these carton, 4 or 5 pieces are missing, we call it as pilferage. Now, generally, why this happens? because many times at the time of loading, unloading, maybe some person working there may just break or cut the box and remove few pieces. So it is like a petty theft. Now, in such cases, as an importer, you had imported 100 pieces, which is stuffed in my one box, one carton. But if out of that 5 pieces are missing, it is not your fault. So the law is very clear. Even though these goods have come into India, but if as an importer you clear only 95, why? Because 5 were pilfered, you will not be required to pay any duty on such goods. So the importer shall not pay the duty which is leviable on such goods which are pilfered. Now, the exception to this is if in future they are restored to the importer. Now, why it will be restored? Because obviously you'll file some complaint, and on the basis of the complaint, if the culprit is caught and the goods are recovered, they will be given back to you. So, in such cases, then you'll have to pay duty. Otherwise, the golden rule, which comes out from all those cases which were discussed some time back, is applied over here. So, even though physically 100 units entered into India, but if you as an importer got 95, you will pay custom duty on 95 because custom duty liability is finally only at the time of final clearance. If final clearance is of 95, tax is on 95. That is what is section 13 saying. Second is section 23. Now in 13, out of the carton, only 5 pieces were lost. In 23, entire carton is lost. So one, entire carton is lost. Two, the carton is destroyed. Why? Because of fire, floods, before it could be cleared. Three, the importer abandons the goods. Why you are abandoning the goods? I had mentioned this also, that when you go in the customs area to check your goods after they are imported, you find that no, these goods are not as per the quality which I had ordered. They are not as per my parameters. So you decide to forego them, abandon them. Now, in all these three cases, where the entire carton either is lost or it is destroyed because of some calamity situation, or three, the importer disowns it, forgoes it, abandons it. In all these three cases, section 23 says that the duty on such goods would be remitted. Again, why? The same logic given by the case laws. Tax or duty on import will trigger only when you clear for home consumption. If before that the goods are lost, or you yourself forego your claim on the goods, and it means you are not going to clear the goods, you don't have to pay duty. So see the implication of the case laws. That is how practically the law is implemented. This is a comparison between 13 and 23. Then comes another scenario, 22. Now in 13, some pieces from the box were lost, pilfered. In 23, entire box was lost. Now in 22, nothing is lost. So you have the box with all 100 pieces, but the goods are now in a damaged condition or they have deteriorated. So let us say maybe because of handling or maybe because of not properly storing it in a proper place, the goods quantity wise are there, but quality wise, either the quality has deteriorated or because of some improper handling and because they got smashed here and there, the boxes got smashed. So some goods are damaged. So let us say out of these 100 pieces, few pieces have got some breakage, few pieces have got some dent, because of which now you know that these cannot be sold in the market at full price. Now in such cases where there is damage or deterioration, so quantity is there, but the nature or the quality has deteriorated. In such cases, the customs law gives you a concession by proportionately reducing the duty. What is this proportionate reduction? It is commensurate with the proportionate reduction in value. So now when you will sell this damaged goods in the market, definitely you will not get the original value. So if the original price was 100, now maybe you'll get only 70. So the duty is also lowered or proportionately abated. So what duty you were supposed to pay on 100, now you will have to pay you will not pay that. You will pay the duty only on 70 because the goods have been damaged or deteriorated. So you are given a reduction and abatement in the duty. So this is another exception to the main charging section. So 22 is saying don't pay the full duty, pay the reduced duty. So how this reduction will be worked out? It is worked out proportionately. So value of damaged goods upon value of original goods multiplied by the original duty. So this will give you the proportionate duty, which will be the lower duty because of damage or deterioration. So this becomes the third exception to our charging section. So as we are seeing, the charging section itself creates an exception. And what are these exceptions? The exceptions are where the goods are imported, but still the law is not demanding or collecting the complete tax. And why? For the same reason which we discussed at the start, referring to those landmark judgments, that now ultimately the customs levy is not the goods coming into India, but the customs levy is on the goods which are finally cleared by the importer. So if they are not cleared in the complete quantity, or if they are cleared in a damaged condition, your duty will be accordingly either abated or you will be given remission. So this is how there is an inbuilt exception giving you a relaxation, a concession in the levy. So with this, we have completed this part. So I will stop here. We have Madam present. So good morning, ma'am.
Good morning, sir.
Yes, ma'am.
Sir, thank you for the insightful session. And today, as all of you know, students, that module 1, module 2 we had completed in the previous session. Today we had started with module 4, that is customs. So, any of you have any feedback, please provide it through the feedback form. And any suggestions you have, any suggestions for improvement of the class, that also you can provide in that feedback form. Please do fill the feedback form, that helps us in improving the classes further. Though we are trying our best to provide you the best inputs and best classes for the final. So, with this, we come to an end of the session. Thank you so much.
Thank you, ma'am. Good day, students. Good day, ma'am.
Good day, sir.
Yes, Ashok ji. Good day. Bye bye.